Good morning and welcome to today's edition of the London Session Open here at investingcube.com. My name is Alejandro Zambrano and I'm the Global Chief Market Strategist of ATFX. We're going to take a look at the markets as we usually do. Just noticed that we do have some issues with the chat. I'm not sure exactly why it is like this, but it looks like you can still say something. If you're here watching this live, most welcome to ask any questions. And it's always great, of course, if you want to say hello or something like that. Okay, let's begin. This is your euro versus the USD, and we've been looking at this pitchfork, and the pitchfork, seems to have done it again to some extent. The idea was just to be bearish from these levels, which we sort of barely touched a few days ago, and we're now at the midpoint, and it looks like the market is going to continue and maybe move down to the slow here from 110.24, and according to the green line, this pitchfork, at least the tendency since last year is that we tend to bounce. So I'm not saying we're going to tumble all the way down to 105.50, but it looks like it like this right now. And obviously, if you did go short here, I think it's fine to sort of work with protective stops just above here. And if it goes actually above here would be better. I think if it does revisit this green line in the next few days, then that will be fully normal. What you're looking at here is really maybe a one-to-one trade if you trade from here. This market does not offer too much. Actually, it's 126 pips, which is still quite a lot. But it's all about that risk-reward ratio, and that risk-reward ratio, if you did short here, now where would it put your stop loss? Would have been up here, so it would have been a one-to-one if anything, and most of the time it has been like a one-to-one if you just want to hit back to the midpoint. GBP, so GBP is fighting back. I'm not sure why this has not been updated, but we talked about yesterday selling up here, and I'm sticking with that idea. So the idea, you could of course hold down here if you wanted to as well. But what I mentioned yesterday is that up here people are probably going to sell. We did go down a bit. Now we're revisiting that level, but the pound is giving a bit of a is fighting back, and technically there's nothing wrong either with the first or this setup. We have not crossed any trend defining levels, but it's fighting back. And always when we look at the different patterns, it's good to sort of classify them. What's a good and what's a bad setup, and this is perfectly fine setup, but it's not necessarily the best. And the reason why it's not the best is what I said yesterday, and that is that the market has declined quite a bit, and as I said before, what doesn't go down will try to go up, and that's exactly what's happening now. So it's going to try to challenge that trend defining level. Doesn't mean it's going to take it up, but it's going to try to challenge that, and if it manages to trade above it, you can have a bit of a corrective move, and we can maybe finally reach, not finally, but we could eventually reach 123, 124, which is the sell zone we talked about for the last few days and weeks actually. This is the dollar versus the Japanese yen, and here's where we made some adjustments to sell at the highs. So we touched these levels a few times. We also talked about selling down here initially, and again that hasn't failed yet. The idea was to sell here somewhere, and obviously on the back of Trump, the whole thing just went straight up. Didn't take out the trend defining level, and then it pulled back down. And I do it sometimes, quite often actually. When I see a situation where the market almost gets me stopped out, and then it pretty much goes back to my entry, it's a good indication that probably it's time to take a step back, and then try to enter again. And I think if people that want to trade this are probably gonna try to sell around 106.50 with stops just above. Crude oil prices, West Texas at least, are inside this range here of 50.58 and 60.94, and it's neither bullish, it's neither bearish, and things are narrowing down, and gives us a good lesson on trend lines and why I'm not a big fan of them. So you might remember we're working with this triangle, and not that I said still this is a triangle, but we need to have these breaks. We never had those, and this is a good lesson, because you can see that this is the triangle we work with, but that failed, and now this is a triangle we can work with if we want to. Triangle are still useful, I think, when and after you get a break to horizontal support and resistance. You can use them to measure potential profit targets. As an example, you could take the base here if you wanted to, but I prefer taking something like this in the middle, because if you go too aggressive, then you will be, it's just going to be too aggressive, and you're never going to reach your profit targets. You can still do something like this. And as you know as well, I do like to trade triangles, but my preference is the ascending triangle or descending triangle, which literally looks like that. So what happens here is that the price goes up like that, and then when we sell, when we push down here, that's when I like to get involved. I don't actually short or go long on the break to the upside here unless I'm super interested. So most of the time I just look for these sort of patterns. The other one, of course, is it's just the opposite, right? When it goes like that, and we've seen that before. We saw one in gold, and it's when the price just goes up, down, and then breaks here. That's what I like. Those are the only triangles I trade like just like that. These triangles always need to be combined with horizontal support and resistance. And what we added, this is gold, and gold is something we did talk about. So as for this being a triangle, you might remember that you had that. I think we already reached the target as well for that. But you can see how this was a triangle because you had this, and then you had that. This was a false move, but when we closed here for my clients, premium clients, I told them this is a breakout, and now we could get the distance here, which you got. Looking at this today, it's way overbought, I think. We're still dealing with what could be a flag. The flag is this. So you have this, which is that triangle, and then you have this, which is the flag. This is the flagpole. Now you can take the flagpole, this section here, and you put it here, and that gives you that target, and that target is up here, and we're really close to that one. You see, this is the target. Actually, that's not 100% correct. Actually, it is correct. You see? So very, very close to these targets. And I think the market is slightly overbought, as I've been saying for quite some time. So that's why personally I have not been buying up here. Now if you want to, because this market is stuck in a parabolic uptrend, think Bitcoin, you know, it just goes up and up and up and up, hardly retraces backwards. When that happens, sometimes you won't have that pullback. In the beginning of a trend, you know, you have a lot of sideways price action, like here. In 2019 went up and then went sideways. We spent a lot of time here, and then we had that, and then people were still not sure if this was an uptrend or not, and then you had that move. So it could be that we missed out, that we're never going to get an optimal entry again. I prefer, though, just still sticking and waiting for a very good entry, and I still think it's down here somewhere. But if you don't think so, you think, you know, there's going to be more worries in the world, people are going to be more keen on buying gold, then you could potentially be working with maybe turning bullish for 1496 with stop just below and trying to trade that to the upside. That's what I would suggest. Now, this is the German DAX. The German DAX and European stock markets were looking really interesting yesterday. Like, they looked, they were ready to tumble. Did a quick update on this one, and the market slid to the targets pretty much. Like, I think I published the update like at 10:30 or something, and then at 11:30 we're already at the target. Now the short-term trend here, we're pretty much back up here. And if you shorted here, I wouldn't have blamed you because I would have done the same. Thing is this though, that the market is now aggressively clawing back losses, and it traded above this level, or is trying. And if you do take out, this is yesterday's high, this is the August 15th high, then this market will no longer be short-term bearish, but it will definitely continue to be longer-term bearish. This is your daily chart you're looking at right now, and realistically the market needs to trade above the August 8th high. On this 6 hour you can see that we're still, clearly in a downtrend. So what may happen here is just that you just have a corrective move, maybe up to something like 11,638 or maybe 11,700, and then from higher levels I would suggest, well, I would assume really, that bearish traders are going to try to short again. This is looking rather bullish. This is really like likelihood that this level holds. I think it's maybe 20% or something like that. So I think here I would probably not short, but if you like, it's possible to short here with stuff just a bit high. I personally think it's gonna go up, and I can only tell you that if we go up here, the risk reward is gonna be good. But it might just be we're just gonna go a little bit higher, and then we just go lower again. And if you're really bullish, you're really super excited, then there are better markets to buy than this one, because this one is sort of weighted down by some significant downtrend. And again, it might just be up and then plummet. What you're looking for a market that is oversold but has a bullish trend. S&P. So this is the S&P 500, and you can see here as well we're trading within a rectangle-like structure, and if anything, this will probably trade sideways for longer. It's really clear when you get rid of everything that you're dealing with support here and resistance here, so you're dealing with a rectangle, or a triangle, sorry. It's just trading sideways. And if we want to keep it super simple, people will probably be buying down here. Just here the risk reward ratio looks okay. And this is one of the very strong markets in the world. So the markets are far more fragile, the German DAX being one. So maybe this is a better option. Now, what's more realistic? What's going to happen now? Well, you can't actually see it, but if you look at this, just give me a second. It looks like I can't snip it. I wanted to show you something. You can probably pull up your own calendars. So it's August, and it's the later half of August. So I think that is going to be very, very quiet in the markets for at least 2 more weeks. And probably even the first week of September is going to probably be quiet as well. So we need to get ready for that. And there's some markets where there's some action, but I think it's going to be rather hesitant. In September we have the Fed rate meeting. I think on the 18th we have the ECB rate meeting as well, where they promise us some rate cuts. So that could be something. But if you look at this, S&P is trading sideways. Euro USD to some extent is trading sideways, and crude oil is trading sideways. Copper as well is also rather choppy. So the biggest markets in the world are trading sideways right now. So you need to understand that things are not going to move that fast. I mean, if we look something like the Aussie dollar versus the USD, the market has been trading sideways since we hit these lows, August 5th. We've been trading sideways. That's for 11 days. So what does that mean? It means in general, you can't trust support and resistance as much. If you see a breakout, you need to be probably wait until the later end of the day to see that we have a confirmed breakout. And in essence, it's time to be rather easy with the with the trading unless your system is built and thrives in these conditions. Okay, let's see here. Is built and let me see if I can load the chat here as well. So we have Nikos here. Good morning to you, sir. And we have Marvin as well. Good morning. I hope you're doing well, both of you guys. Let me see if I can load the chat. Okay, so we're going to see if you guys have any questions. Good morning. As well, all of you guys that are watching, all 9 of you, don't forget to hit that like button. That's always nice. Okay, so we don't have any questions, so we're gonna wrap things up. I want to thank you so much for joining me this morning, Nikos and Marvin and everybody else that is watching. And if you have questions during the day, you know how to get a hold of me. I won't be able to tell you if you should be buying or selling. I can just sort of, because I'm not a licensed sort of. You need to be licensed to give people direct advice, telling what to do. As well, I think it's really important from a trader's perspective that you own your own trading decisions. I can obviously help you a bit. And so the best tips in general is don't trade with too much leverage. Like everything, like all markets in the world exhibit bull and bear trends, and when they're just trading sideways, right? So they're gonna be doing like this, and then sometimes they do like that, and then sometimes they do like this, and then they do like that. All right. Typical markets. You got yourself the sideways, you got yourself the bullish trend, you got yourself the bearish trend, and then you got some more sideways, and then you get that push. Okay. This is it's just a line I did, but it could easily be your equity account. So you can have like money here, and then you have time here. And every trading account, every trading system will have this period. And for example, there's a gentleman that is short gold, and he's been short gold since there's a gentleman that is short gold, and I think he's short gold from something like down here. I think he said 1,400, and it's rather typical. People contact me when they are down 20, 30, 40% of their accounts. I'm not sure exactly if that's what he's down, but it's probably a significant amount of money for him or her. And as traders, we need to make sure that we don't do that. We can't put too much on any single individual trade, unfortunately, because the markets are random. Why are they random? Because they're made of people like you and me. You and me make the market, plus you have a bit of fundamentals. And everybody has a different view on how to read the fundamentals. You ask one economist, he says this is bullish. He says price should be at 100. You ask another economist, he says this is bullish. It should be at 150. And then you ask another economist, he says actually this is bearish. It should be at 50. And this is also bearish. It should be like at 25. So suddenly you have like so many widespread views. And especially in currencies, it's actually rather interesting. Let's see if I can find that. See if we can find those images. Okay, this is from August last year. So this is for the euro dollar, it should be. And this is the actual prices from the second quarter of 2018. And you can see here like in this yellow line. This is the yellow line, and this is BNP Paribas. And they think by the second quarter of 2019, the euro dollar should have been at 131. Well, we all know that the euro dollar was never at that level. And these are some clever people. I met actually the head over there and one of the strategists. And they had some very good few years. I remember a few years ago they were really, really good. But we're no way near in the second quarter around these levels. And then you have Commerzbank. I actually had a brief talk with that guy. Not the nicest person. And he suggested 114. It looks like that guy actually is the one that was the most right. All the other guys here, because I mean the market, where was it at the end? Let's see, where was it in the second quarter? By the end of the second quarter, so here, so yeah, 111, 112. But what is striking here is how there's such a wide spread, 114 and 131. That's a huge spread there, what people are saying. And these are people that are making 150,000 pounds a year. Some of them maybe 200,000, 250,000 pounds on forecasting. That's how much they've been paid in PhDs. And it's still like a huge difference. And the reason for this, again, is that they would look at the fundamentals and they try to project. But then we have humans. So the way people interpret it, these are humans as well. And the way you interpret the data is so different. And then when you put money at stake, it becomes even more striking because, you know, people, if they have a winning position, they sometimes think, oh, look, it's going down. It's going to go down even more. Let's sell some more. And they stop thinking. At the same time, which is more typical, especially for the retail trader, is that they start to lose money. And then they buy more, the average in, to get a better entry. And then, unfortunately, they get stopped out at one point. And what happens is that you just end up losing by one or two bad trades. And you really want to avoid that. So that's why I always suggest to people, max risk 1.5%. If you really like something, maybe 2%. If you're trading short term, so you know you're going to trade 3 times today, then maybe you take 1.5% divided over 3. But for example, even in my case, I don't trade every day. I hold positions for a few days. So, you know, to give you an idea, I'm not doing this so great this year. But on average, the way things are looking for the last year, my account per month is going to have a swing of 2.85%. Does that make sense? Because if you risk 1.5% and you're scalping and you have 5 bad days, well, you're down with 7.5. So if you do that for a whole month, you could technically be down with 32%, which is quite a lot. You can be up by 32% as well, which is also, again, quite a lot. But the thing is when you do like that, what's going to happen is that your account is just going to swing like crazy. It's going to be doing something like this. So instead of having these sort of normal ups and downs, if you trade with a high leverage, it's going to be up and down, up and down, up and down. You get the picture, right? And that volatility, except that little extra thing there, is much like anything else. If you're in a boat that moves too much, you get seasick. And it's the same thing with trading. When the account of yours swings too much, you get more emotional and more prone to make mistakes. Okay, I think we're gonna wrap things up. So this is the final update for this week, and we added a bit of educational to it in the end. I hope you enjoyed it, and I hope to see you guys on Monday. As always, don't forget you can follow me on Twitter if you're new on. My name is Alejandro Zambrano, and I'm
Thank
the
you so much,
global
Marvin.
chief
Have a good one as
strategist
well.
of ATFX.
And as well on we're now on
We're gonna take a look at the
Telegram.
markets as we usually do. Just noticed that we do have some issues with the chat.
And
Not sure exactly
actually,
why
what
it
you
is like
can
this.
do, so we've done it very
But
easily for you.
looks
So
like
when
we
you
still
come
say
here,
something.
you just want to read our updates.
If
Just
you're
scroll
here
down,
watching this live,
and they will load.
most welcome to ask any questions. And it's always great, of course,
So
if you want to say hello or something like that. Okay, let's begin.
it's actually not loading.
This is your euro
as
versus
it's
the
loading, but
USD,
it's loading.
and we've been
Not
looking
actually
at
loading
this
the articles I want it to load.
pitchfork,
Uh,
and the pitchfork,
better just click up here and go
seems
to
to
the
have
main
done
page.
it again to some extent.
Okay, guys, have a great day,
The idea
and
was
I'll see you guys
just to be
Monday.
bearish from
Thank you very
these
much,
levels,
and
which
bye
we
bye. See
sort
ya.
of barely touched a few days ago, and